Hi, I'm James Pacholek from CMG Wealth Management. On behalf of the entire firm, we'd like to wish you and yours a very happy new year and prosperous 2024. In today's video, we're going to recap 2023, give you the firm's outlook for 2024. So let's start right at the beginning of the year. January of 2023, we saw the S&P up over almost 9%, which was one of the best starts to a year ever. As we progressed into the first quarter, into March, we saw, of course, the regional bank collapse. We saw the second, third, and fourth largest bank collapses ever. In fact, the amount of the collapse actually surpassed the bank collapse of the financial crisis in 2008. Briefly, what happened, and then why did that seemingly just go away instead of being the next financial crisis? Well, banks had bought long-term treasuries when the yields were very low. And so when the Fed raised interest rates so rapidly, the treasury prices fell. And then when depositors started to withdraw money from the bank, when those withdrawals were greater than the cash reserves on hand, they had to sell those treasuries at a loss. And when the market found out about that, it did not end well for SVB. In fact, in 24 hours, we saw the bank have $42 billion worth of withdrawals. So why did it seemingly just go away? Well, it was the Fed and the Treasury's coordinated effort. They came out with what was called the Bank Term Funding Program, which allowed those banks to take those treasuries that had lost value and give them to the Federal Reserve and the Treasury in exchange for a loan. But here's the key, not at the lower value, but at par value, thus putting a backstop on the entire banking system. They also promised to make all depositors good at those banks. And because of that backstop, it just went away. In fact, that was the low for the S&P 500 for 2023. As we went through the year after that, one of the big events that took place was the AI exuberance. It is very rare that something rises to the attention that takes the market and is a main theme, but AI did just that. In fact, we saw NVIDIA rise over 200%. It's worth noting, too, the market's infatuation with it and consumer demand for it. We saw the ChatGPT app be the fastest app to reach 100 million users ever. It took just 2 months. That's twice as fast as TikTok or Instagram. And so we will have more on AI. It is definitely going to be a game changer, and there are going to be lots of ways to invest in that, and some we've already taken advantage of. What we saw in July was the Fed, and worth noting, one of the big concerns coming into 2023 was the double-digit inflation. What was the Fed going to do? Could they raise rates high enough to put the fire of inflation out without toppling the economy? And it looks like that's what happened. Remember, in June of 2022, we saw almost double-digit inflation. June of 2022, inflation CPI was at just under 10%. So as we saw that go down and we saw wages go up, that's the Goldilocks scenario the Fed was looking for. And so as we progressed through the year, even with that backdrop, we still saw the September and October sell-off in the market, the over 10% pullback. In fact, worth noting, the bottom of that was at the end of October. And at the end of October, the Dow Jones Industrial Average was actually negative for the year. The Wilshire Bond Index was negative for the year. We saw the equal weight S&P negative for the year, and the S&P 500 was just a single-digit gain, just under 10%. And then November and December happened, a parabolic move up. In fact, it's 99 percentile as far as a 2-month move up. And we saw the big move from the Fed to round things off in December. In fact, we thought, as many did, that with the move in November, the Fed might talk down any chance of a rate cut and continue with their very laser focus, their narrative of higher rates, almost don't expect anything from the Fed. But that's not what happened. In fact, it surprised us all. Not only did they not raise interest rates, which was to be expected, but they actually forecasted for 2024 3 rate cuts. And the market's forecasting almost 6 rate cuts. And so with that, we saw the market continue throughout the end of the year upwards. In fact, to round out the year, the NASDAQ at the top with a 44% return. The S&P was a 26% return. The Dow Jones Industrial Average was up over 16%, and the Wilshire Bond Index was up almost 7%. A far cry from what happened in 2022. And just to take a small trip down memory lane, remember in 2022, it was the first year ever that the S&P 500 and Treasuries were both down double digits. The last time they were down even single digits the same year was in 1969. So these amazing events that never seem to happen have been happening a lot lately. And as a firm, as we've conveyed to our clients, the reason for these draconian moves is the unprecedented stimulus, both fiscal and monetary. We saw our national debt last year rise to an all-time high, $34 trillion. That's something to take note of coming into 2024. So with that said, it's also worth noting that in 2022, the S&P 500 only reached one time an all-time high. And in 2023, it had not reached an all-time high at all. Statistically speaking, when you look back at that, prior, we saw significant all-time highs in the S&P in 2021, 2020, and of course in 1918 and 2017, and the S&P hitting all-time highs seemingly daily. So when you look at the last 2 years, the NASDAQ is still not at an all-time high, and the S&P 500, though it had a great year, has not reached its all-time high. So with 2024, our outlook is cautiously optimistic for stocks, and we were very optimistic with bonds. And we will be getting back with our clients on a quarterly basis or as events ensue, and to let you know and keep you well informed. But with that said, we want to thank you again for being a client of CMG Wealth Management. All the best to you in 2024. Everyone, take care.